Welcome to the deep dive. If you've ever sort of wondered how a social media giant juggles, these huge future bets against needing to make money now, well, you're in the right place. Today, we're really digging into Snap Inc.'s third quarter 2025 results, all the performance data.
Yeah, we've got the earnings slides, the 10Q filing, the press release, and they tell a pretty interesting story. It's like they're running two races at once. You've got the short game making money today, and then this long marathon of platform innovation.
Right, and our mission here is to unpack all of that, see how they're managing these big investments in things like augmented reality, generative AI, while still trying to grow users and, improve the bottom line.
Exactly.
And something jumped out immediately, didn't it? A sign that maybe the non-ad stuff is kicking in.
Oh, definitely.
Let's start there. That's a prize stat. Other revenue, mostly Snapchat Plus subscriptions, up a massive 54% year over year.
Yeah, staggering growth for something that wasn't really a thing a few years back.
Plus, and we'll get into this, the engagement with their new AI features. It's
Yeah.
just huge, exploding. Okay, let's unpack this. Maybe start with the foundation, the community. How's that
Right.
looking?
The community is definitely at Snap's bedrock. Everything else kind of builds on that.
Yeah.
So Q3 2025, they hit an average of 477 million daily active users.
Globally, almost 500 million people checking in every day. Wow.
Yeah, and that's up 8% from the same time last year, Q3 2024.
Okay, 8% growth, solid, consistent. I know the sources mentioned a slight change earlier in the year, Q1, in how they record activity. Did that affect this much?
Not really, no. They called it immaterial, less than 1% overall impact. It mostly affected the rest of world region. Just, refining how they count users with spotty connections.
Yeah.
So that 8% growth is pretty much real organic growth.
Got it. But just knowing the number of users isn't the whole picture, is it? We need to know what they're worth.
Exactly. Which brings us to ARPU, average revenue per user. Globally, it was $3.16 for the quarter.
And this is where it gets, well, uneven. Looking at the regions, North America is still carrying a lot of weight.
Oh, absolutely. North America ARPU was $9.20.
920. Okay.
Then you look at Europe, still mature market, but less money, $2.99.
299. Still a good draw.
And the rest of the world, way down at $1.11 per user.
That's a massive gap, like 8 or 9 times the value between a North American user and a user elsewhere. Are the sources giving us any clues on how they plan to close that? Or is it just the reality of global ad spending?
It's largely structural, yeah. Reflects ad market maturity, spending power, all that. But the sheer number of users in the rest of the world is their big potential lever, right? Their strategy seems to be about improving the ad tools everywhere, hoping better automation, better AI can help bridge that gap where they maybe don't have big sales teams on the ground.
Betting on AI to level the playing field globally. Makes sense. And just quickly, there's that technical point about how ARPU is calculated versus total revenue, right?
Yes, super important. ARPU is based on where the ad was seen, trying to approximate the user's location. But the actual revenue for the financial statements, that often gets booked based on the advertiser's billing address.
So a big company in, say, the US, advertising globally, that revenue hits the North America books, but the impressions count towards ARPU in Europe or rest of world.
Exactly. It gets complex, which is why looking at the total revenue picture is key.
Okay, speaking of total revenue, let's shift there. Segment 2, revenue growth and diversification. Total revenue for Q3 2025, $1,507 million. That's up nicely from $1,373 million last year. How are they doing it, especially in ads?
They seem to be executing really well in performance ads. Direct response, or DR, that category grew 8% year over year. And the key thing, that's an acceleration of 3 points from the previous quarter. They're picking up speed.
Right. And for listeners, direct response means ads trying to get you to do something now. Buy this, install that app.
Yeah.
So if DR is accelerating, it suggests advertisers are seeing better results, better ROI.
Precisely. And the sources back that up. Purchase-related ad revenue grew over 30% year over year. Snap saying it's because their attribution is better. They can actually prove their ads led to sales, and the campaigns just perform better overall, solving that big tracking problem.
They even gave some specific product examples, which I thought was interesting.
Yeah, like the sponsored snaps. They said when advertisers mix those in, they can drive up to 22% more conversions and get up to 19% lower cost per action, CPA.
So use our whole toolkit, get more bang for your buck. That's the message.
Pretty much. And they threw in that Kantar study saying 85% of U.S. Snapchatters find them relevant. So good for users and advertisers.
And AI is woven through all of this, isn't it? It's not just future talk anymore.
Not at all. It's hitting the bottom line now. They're using large language models, LLMs, directly in the ad stack. Mentioned using LLMs in their advanced dynamic product ads. resulted in over 4x higher conversion rates in some campaigns compared to the baseline.
4 times. That suggests that AI is getting really good at matching the right ad to the right person.
Seems like it. And they've really focused on that tough iOS environment too, right? With the privacy changes. Tell us about the App Power Pack.
Ah, yes. The App Power Pack. It's basically a suite of tools for app advertisers. Things
Okay.
like improved target cost bidding, where you tell the system what you want to pay per install, and the AI figures out how to get it, and the result they're reporting over a 25% lift in iOS app installs using this pack.
Which, given how hard tracking is on iOS now, a 25% lift is. Well, that's
Whoa.
a pretty big deal in the ad tech world.
Huge win, yeah. Okay, and finally on revenue, back to that other piece. The 54% growth in other revenue, $190 million.
That's almost all Snapchat plus their subscription service. It shows a chunk of their users are willing to pay monthly for extra features, good product market fit there. And they're adding more non-ad stuff too, like launching memory storage plans in Q3.
Okay, so money's coming in faster, the ad platform's getting smarter. Where's the investment going? Here's where it gets really interesting. The big bets on AR and generative AI. The scale here is just wow.
It really is hard to wrap your head around. The AR numbers alone. The community uses AR lenses 8 billion times per day.
8 billion. That's an interaction most other platforms just can't match at that volume, right?
Not like that, no.
Yeah.
It's core to Snapchat.
Yeah.
And it's not just a niche thing either. Over 350 million Snapchatters used AR daily on average in Q3.
And the developer ecosystem fueling this.
Massive. Over 400,000 developers. They've built more than 4 million lenses.
Having that many creators building for your platform, that's a strong competitive advantage. A moat, really.
Definitely. But the really eye-popping numbers recently, generative AI.
Okay, what are those stats looking like?
Get this, more than 500 million users have tried Gen AI lenses. And those lenses have been engaged with over 6 billion times in total.
6 billion interactions with Gen AI features.
And one specific example,
Yeah.
the AI face swap lens.
Yeah.
Over 1 billion engagements just in Q3. The speed of adoption is just incredible.
That kind of viral hit suggests these AI features aren't just tech demos. They're becoming part of how people actually use the app day to day. So what new tools did they roll out to keep this momentum going?
A lot of focus on making creation easier. They launched the Imagine Lens first open prompt image generation tool right in the camera for consumers.
Yeah.
But for those 400,000 developers, the Lens Studio AI assistant sounds revolutionary. Basically, a developer can just describe what they want a lens to do in plain English.
And the AI helps generate it, code it, refine it.
That's the idea. Massively lowers the barrier to entry. Should mean even more. Faster content creation.
Makes sense. What else?
They mentioned realistic stylogen mode, using on-device machine learning for really lifelike transformations on clothes, hair, stuff like that.
Yeah.
And the key partnership, integrating Perplexity AI for conversational search right into Snapchat, bringing broader knowledge into the app.
Right. And importantly, how are they helping creators make money from all this? I saw something about payouts.
Yes, Lens Plus partner payouts. This is key for keeping those developers engaged. Creators can now earn directly when subscribers publish their exclusive Gen AI lenses. It closes the loop engagement, drives subscriptions fund creators, creators build the next cool thing.
Okay, so we've got faster monetization, strong user growth, really cutting-edge engagement with AR and AI. Now, the flip side, financial health, are they actually getting profitable? And the significant legal challenges.
The financials do show improvement toward profitability, especially using their preferred numbers. GAAP net loss, the official accounting loss, improved 32% year over year in Q3, down to about $103 million.
Okay, better loss. What about the non-GAAP stuff, like adjusted EBITDA? Maybe a quick reminder what that is.
Sure. Adjusted EBITDA is basically their look at operational cash flow before things like interest, taxes, depreciation, stock compensation. It's their internal health metric. And that number looked good. $182 million, up 38% year over year, shows the core operations are generating more cash.
And free cash flow, actual cash left over.
Positive again. $93.4 million in Q3, also up from last year. They're also managing their debt pretty actively. They have about $3.5 billion total. They issued some new, longer-term debt, $550 million of 2034 notes, and used most of that cash to buy back some older convertible debt.
And doing that actually gave them a gain, the gain on extinguishment.
Yeah, $29.8 million gain recorded in Q3. Basically, they retired some old debt early at a good price, so it counts as a one-time accounting gain. Smart financial engineering, but like you said, not operating income.
Right. And their cash position still looking strong.
Yeah, $3 billion in cash, cash equivalents, marketable securities, plenty of liquidity. And they just finished one $500 million stock buyback program in May,
Okay.
and then subsequently in November authorized a new $500 million buyback program, signaling confidence, presumably.
Okay, now for the really tough part, the legal situation. The
Yeah.
list seems long.
It is, and it's coming from multiple angles. On the investor side, the securities litigation. They preliminarily settled that 2021 lawsuit about Apple's privacy changes for $65 million. But boom, a new securities class action was filed in August 2025. This one's about an ad platform change they made that allegedly hurt revenue earlier in the year.
Okay, so investor lawsuits are ongoing. Then there's the platform liability stuff, which feels like an industry-wide headache.
Definitely the bigger operational risk. They're facing lawsuits over platform design, claims it's addictive, harmful to mental health, especially for kids. Also content liability suits, including those really tragic cases involving fentanyl overdoses where communication supposedly happened on Snapchat. And finally, with all this AI innovation comes regulatory attention. They noted the FTC referral about potential risks of the My AI feature for younger users.
Wow, so a lot happening on that front.
If we connect this to the bigger picture, Snap's really executing a classic playbook. Grow the users, improve the finances, especially with better ads and subscriptions, and then plow resources into the future, tech AR and Gen AI, where they clearly have huge engagement. They're nailing the product vision.
Yeah, the product execution seems strong, but they're constantly fighting these rising costs of just operating the regulations, the lawsuits about safety. You see that incredible engagement, like 6 billion Gen AI Lens users, showing this massive potential users love. But then right alongside it, you have the FTC looking into features like My AI. It really frames the central question for them, doesn't it? Can the speed of their innovation keep outpacing the rising legal and regulatory costs of running this kind of global platform, especially one aimed so young? What stands out to you?